Good morning and welcome to Market Day Report. I'm Chris Swift. I'm anxious to see what we're doing from the overnight session last night. I know that everything was a little bit soft, and I've got pretty good reasons why. So let's take a look at the corn board this morning. We got March down 3 1/4 at 443 even. We lost all of last week's gains. May down 3 3/4 at 452 even. The July contract down 3 1/4 at 460 1/4, and that new crop December 474 1/4. Down 2. In our soybean market, it was really soft again last night, down 7 1/4 on the March, 12.02 even. Lost that 12 handle at some time last night. We've been as low as 11.98 on the March. The May contract down 6 at 12.10 1/4. July beans down 4 at 12.20 even. Chicago wheat was sharply lower last night. Still is down 8 on the March at 5.92 1/4. Been as low as 5.89 1/2. May down 9 at 601 3/4. New crop July 607 1/2, down 8 3/4. On the Kansas City hard red winter wheat, softer as well, down 11 1/4 on the March at 613 1/2. May 613 1/2, down 11 1/2, and July down 11 at 612 1/4. And just take a real quick peek. All three of those prices are within a penny and a half of one another. No carry whatsoever, and that is a new crop versus an old crop. Really interesting. There's no premium at all on that new crop product. And on the Minneapolis spring wheat, down 8 on the March at 695 1/2, low down 694 1/4. The May down 6 1/2 at 699 1/2, and July down 6 1/4, 703 1/4. And let's look at cotton. See, cotton's a little bit firmer this morning. March up 66 at 85.03. May up 67 at 86.30. That Deese new crop, 81.19, up 57. I'd like to invite my guest in, Brian Hoops. Brian is with Midwest Market Solutions. Brian, I kind of think I know why the grains are down, but I'm anxious to hear what your take on it is.
Hey, good morning, Chris. Yeah, it's not a great start to our week. They were a little bit softer out of the gate last night and continue to push lower, as you mentioned. Beans traded below $12 overnight. That's the first time we've been below the $12 mark since going back to June 9th of last summer. So it's been quite a while, and we may not be done with this selling and pressure yet. The weather in South America is going to be, of course, the big driving factor, and it looks very good. It was dry in northern Brazil for quite some time, but they've had ample rainfall since that dry stretch, and it's really helped and improved a lot of the crop, especially that was reseeded or second planted. Harvest is probably maybe 10% done, maybe a little bit over that by now in all of Brazil. But the forecast looks very, very wet for Brazil and Argentina, and just the very southern tip of Argentina is the area that's dry and shortchanged, and it's pretty minuscule. In the big picture, it looks like their crop has definitely stabilized and is probably going to, at least be at this level, maybe even larger in subsequent USDA reports.
Right, and I've heard our farmers over and over again last year discuss that the bean crop was made in the last 2 weeks of the year, of the growing season there. Everything was really bad for a while, and all of a sudden they got just that right rain at the right time and was able to boost it. So what a great testimony to our drought resistance crop. But the big issue is the rain. We have ample moisture here, and I can only imagine what kind of yields we're going to be looking at this year with the increase in subsoil moisture. Anything else you see out there about that?
Yeah, you look at, well, you mentioned wheat is down again this morning, and going across the winter wheat plains, they've had a lot of moisture in the last 2 weeks. Now we're going to see temperatures in the 50s, maybe even some 60s in some areas, maybe some more moisture coming in parts of that hard red wheat area, especially in areas that were incredibly drought-ridden a year ago at this time, like western Kansas and parts of Colorado. They're going to receive more moisture. So it's hard to really build a case that we're abnormally dry, especially in the winter wheat belts. You go into the spring time frame, that can be an issue, especially as we plant corn and soybeans. The wheat comes out of dormancy, then it can become an issue. But dryness here in the month of January into February across the U.S., it's not something that's going to move the market. So what can change things? It's going to have to come from weather out of South America. Maybe some demand will have to start picking up, certainly as we see prices approach lower levels like we're seeing, soybeans making new lows. we're probably going to see more demand start to usher in, although we haven't seen any private export sales for soybeans for quite some time. Just one sale of soybean meal last week, and nothing for soybeans this morning or last week at all.
Wow. So I know I have a little bit of firsthand experience in seeing that wheat crop out in western Kansas from this past weekend. Let me tell you, it looks really, really good. And I can attest they do have the moisture out there. And I saw the warmer weather, Tim just showed that. So I'm going to be real anxious to see what we look like on this week's drought monitor to see how much of that's taken into impact there. Brian, stay with me. We're going to go away and take a real quick commercial break. We're talking with Brian Hoops from Midwest Solutions. Stay with me. Good morning and welcome back to Market Day Report. I'm anxious to see how the cattle are going to trade today after last week's gains, and they were stellar gains. So let's take a look and see how we're going to reopen this morning. The Feb contract on Friday closed up 72 at 178.45. We traded between 175 and 176 cash in most places that I saw. April up 97 at 181.67. June up 125 at 178.85, carrying a 40-cent premium over the Feb contract, which is very unusual. In the feeder cattle market, they had stellar gains in that too. March up $1.52 at 239.70. The April contract up 167 at 245.60. The May contract up 192 at 251.17. And the feeder cattle index on Friday closed at 232.06. So note those premiums are getting to be a little bit stretched out there on the basis. Finish up with the hog market, and it was a little bit stouter as well. The Feb contract up 62 at 74.92. April up 70 at 83.25. And that June contract up 75 at 96 even. I'd like to invite Brian Hoops to come back in. He is with Midwest Market Solutions. And Brian, anything specific you see in the livestock market getting ready for this morning?
Yeah, in the cattle market, a lot of reports and things happening this week for cattle. Semi-annual cattle inventory report comes out Wednesday afternoon. Trade is looking at probably a bullish report here. We're looking at 98.3% estimate for all cattle and calves, around 97.5 for the annual calf crop. So it looks like, our supplies dwindling once again should be friendly longer term for this market. Feeder cattle and the deferred live cattle futures should really benefit from that. Friday is February live cattle option expiration. A week from today, we have deliveries against that February live cattle contract. The cash trade stronger last week, $2 to $4 higher address, $1 to $2 higher in the Southern Plains. The Fed Cattle Exchange even had some cash trade even above that at 176. So it's it's opposite of the grain markets, where you have a very strong, a very bullish fundamental market for the cattle. Maybe we're a little bit overbought, and maybe we have some corrections, but otherwise it looks like we're going to continue to try and push this cattle market higher and higher, especially as we go into what I think is the second quarter of this year, where it could be more of our high period for the year.
Right. And have you heard anything out there about the health of the animals since the storm? Have they started to recuperate a little bit?
Yeah, this weather is certainly improving and will help the animals out. It certainly helps the feeder out, as well as he doesn't have to battle that wind and those big snow drifts that were commonplace. So the cattle have lost quite a bit of weight. It didn't take long in that bad weather. They lost a lot of weight. We saw our steer carcass weights drop sharply last week, probably see another drop this week. But on the country, we're at least going to stabilize those weights and maybe start to put some pounds back on as that weather improves.
All right. And anything on the hog market real quick?
Yeah, hog market, is struggling this week. We had the cold storage report out last week and kind of gave us a big boost in prices. Now we're going to struggle looking for that direction once again. A lot of technical buying in the hog market. So if we can take out last week's highs, I think you'll continue to push this market higher. Absolutely.
Brian, certainly do appreciate you taking the time to be with us this morning. As Brian Hoops, he is with Midwest Market Solutions. And Tammy, a few more minutes, we'll hear the opening bell, and I'm ready for it.
Glad to have you back in town.
Thank you, appreciate it. Glad to be back. Yes. Got more for you after this.
I can't wait.